Good morning, everyone. Welcome to this new edition of the morning briefing. Let's get started right away. So I wanted to start by revisiting what we discussed yesterday morning in the morning briefing, where we expected this third wave on the American indices. The third wave that kicked off yesterday, also with quite high volumes. Just think that the ES has done, or 33727. 3.0 millions of lots traded, while the Nasdaq 844,000, these are huge numbers, very large. If we go back and look at them, we're at very high levels, almost at the 100th percentile. In 7 years of data I've been able to look at, it has only happened 5 times that the volumes were higher than yesterday. So breakouts in the start of the third wave occurred with very, very large volumes. So pay close attention because the movement could absolutely extend further. Let's start by looking at some charts, and then we'll also do an overview, or rather more than an overview. Today there is little data, or rather two data at 2:30 p.m. for the personal spending index, which is certainly important, but at the moment the market is looking elsewhere. As I said yesterday, the market always needs to be impressed. And despite the good results from Nvidia's quarterly report, Nvidia's stock dropped about 8% yesterday during the session. It was connected, as we mentioned yesterday, that the situation for the markets, it is always aimed at something excessive, something that must amaze in numbers and facts. So numbers, in line with the usual performances that these stocks have had, at this point they will start to be more attractive. And the market is doing exactly the opposite of what it used to do. And so we need to get used to thinking in this new framework, which right now tells us that the market, the trading environment has changed a bit, is strengthening downwards. The pressures are becoming consistent, and we can see that from the volumes. So pay close attention, please. Today is also Friday, so double caution. Preserve your financial and psychological capital. Okay, let's start with the Nasdaq. From a graphical point of view, I wanted to show this 4-hour chart with a volume profile starting from 2023. We can see, so these two blue lines essentially represent the value area, and that red one, this red one, is the point of control for this entire period going back 2 years. And you can see that the Nasdaq, yesterday it returned to the value area of this long period that we can see here. Where could this wave go? Probably the 20,000 area is also a crucial first support that shouldn't be broken, because if you look below, the volumes start to dwindle a bit. So this is an area that could be crossed quickly to have a landing even in area 18,000. In short, we'll see. Could also extend. Obviously, guys, I'm not talking about just one day. Let's be clear. In short, over the course of a week, these are targets that could easily, materialize. So based on what we have in front of us. On the chart, the situation is more or less similar on the ES, still with a 4-hour chart following the same logic, so a volume profile anchored. And we can also see here that, well, it has remained within the value, but we broke the point of control at the top. We're working on it down here. So a first target could be around 57 to 60 for that. Here we have a volume gap, probably due to the contract change. And so, well, here too. So the situation is similar. The first then real support levels with very important volumes, and we have further down in the 52, 53 area for S. Saroti, these are obviously at 54, 55, 56, 50, and 55. So here too, it's a situation to keep an eye on, having made this overview a little more to get a broad view to frame where we are, and so to contextualize the moment in order to also look for the most suitable operations. At the moment, I wanted to give you this overview. Let's go back to the Nasdaq and take a closer look at what we can expect today. Of course, let's get back to the 5-minute chart. Just a second while I load this up. First, let's get rid of this. We're loading the levels. Here we go. We're ready. So at the moment, we're working below the expected weekly lows. As for the Nasdaq, for the day, we're still within the range. We're working inside the range in short of the PC levels, BC3. So a break of these Venus. So an attack on RD1 could be likely. A break of RD1 could definitely push prices towards RD2 quickly. Because here, after all, there have been volumes, but here, right at this stage, there haven't been excessive ones, but it certainly could. In short, it could certainly slow down the RD1 movement. But as usual, it is likely that the RD2 will attack there could be a first attempt to recover before then. So, as we said earlier, the situation seems pretty clear to me. So I would lean more towards the short side on the American indices. I still expect a bit of a decline in the coming days. Then we'll see if it's like that. So, what will the reasons be? Then to be adduced to this pullback. In short, beyond technical elements and factors, macroeconomic elements and factors undoubtedly also play a significant role, like the policies we've certainly always discussed in previous morning briefings. What influences that? They will definitely impact everyone's performance. The markets. So this is the situation at the moment, so keep an eye on it, please. Maximum caution, even if we look at it on a 5-minute chart. The Nasdaq chart, which, like the American indices, we can easily, in short, framing it as a movement that tends to keep going. Lower highs and lower lows. So the trend seems to be quite set. We have this general indication, so let's try to make the most of it. Let's also take a closer look. First thing, should we remove this volume profile? Let's go back to the 5-minute chart. Let's load up quickly the levels. Here we are. All right, let's just zoom out a little bit more. There we go. Perfect. We're in a more or less stable situation, aren't we? So here we're working just above. Well, the levels are fluctuating, but still contained within the range between RD1 and SD1, which seems to be the one we can work with at the moment. In the morning until the markets open, unless there's an immediate push to recover a bit more significantly. Because as I mentioned yesterday, as I said earlier, the volumes yesterday were very, very high. So it's likely that today they won't be as high. So maybe the day will be a bit slower, a bit more of a wait for any developments. We'll see. Well, as always, let's look at what we have in front of us and not create scenarios, preconceived notions that then affect our judgment when we need to make trades. So just to be clear, these are the levels to monitor. At the moment, we're in this range phase. So a breakout of RD1 to the upside could signal a move for the Nasdaq towards RD2. Before and after, in short, the upper area of the VX cluster with the expectation of a high of the day or vice versa. In short, a downward break, which then of SD1, which then, for example, would also represent the break of the weekly minimum range, which the Nasdaq has already done with a breakout yesterday. It could definitely give the opposite side a further push, with incoming volume with good probabilities. Okay. In fact, let's move on to these two main ones. To the Dow Jones. Here it is. The Dow Jones. The situation is quite similar for the American indices. Well, it seems that I might have to be repetitive, but that's the situation. So the situation is clearly bearish, even though essentially the Dow Jones index has held up a bit better recently. So right now, ESO is also working within the range of yesterday's BC3 levels and those formed since last night. At this moment, so we are within this range. So here too, between SD1 that you see, which also represents a low that was made the night at 2. 2 a 3 SDBN RDBN. So right now, they are all working within this range. So the break of these levels on either side could lead to a rise or a recovery, or even some good opportunities to find short points. This obviously seems superfluous for me to say. We said it in advance. At the beginning, well, we are in a situation where shorting is definitely preferable to going long. At this moment, however, there shouldn't be anything that ties us to going short or going long. We just need to apply the strategy, and try to take advantage of these swing points. Clearly, to have a higher probability of success if you identify the right entry point. Shorting in these market conditions is definitely easier to manage and with higher chances of winning. This should be the focus of everything we do, to constantly calculate and evaluate the probabilities that the trade will be in our favor. Basically, this is our job. Okay, let's continue with the Russell. As I mentioned earlier, I expect that this index will hold up better than the others. Right now, it's also working on the BC3 levels. And, well, we'll also see RD1, SD1 here. In short, it seems to me that these are clearly the two levels that need to be monitored. So waiting for the opening, and from here, then we can evaluate the operations and the direction of the day. Let's take a look at the DAX, which at the moment, well, as we always mentioned yesterday, in short, this sort of channel that I have not traced, but if we want, we can. Let's quickly add a regression channel. Here it is. So without trying to make anything complicated, just drawn from the high to the low without adjusting it or anything, it's clear that this channel exists. At this moment, it has touched the lower part. We're at the lower part. So from here, if the trend continues to be this way, and if it finds, well, the push also downward as a consequence of what we've said about the American markets, it's likely that then it could continue in this channel. We'll see. Well, it's not certain. It could also break it. And here, going to test the area of the highs could happen after yesterday's declines. A minimal attempt at recovery, essentially. Let's move on to the two main ones. Commodity. Let's take a look at oil. Yesterday, it has basically moved sideways. It didn't provide any major insights. What's going on here? I mean, not yesterday, at the beginning of the week. After the big hit taken on Tuesday, it moved sideways all Wednesday. And then yesterday, well, it gave a nice recovery push. Let's take a little look here. Here too. So as we were saying, we're in a declining phase with rising highs and lows. At this moment, we've hit the HV level. This has been the case since yesterday. Let's take a little look and expand on it. I hadn't prepared this at all. I'm watching it along with you. Okay, so it had worked here last night at the close, because you basically, around 8 o'clock is when you can consider the close for commodities, not around 10. We're currently working below the BC3 levels. We're already resting on SD2. So basically, if it's staying at 4, how much is it staying at 4? How much? It's undoing what was done yesterday. The little channel seems nice and clear for the day, so it's quite directional. So a break of SD2 would definitely be there. Testing these levels of the VIX levels. And if we want, also of these other levels, which are always BC3 levels. So around the value area, let's see, It could very well happen. Well, the movement happened not with excessive volumes, but it still occurred. So for the most part, with pushes probably due to the initial recovery. So a bit of war winds for an increase, then you pull back a little, the skirmishes, the movement has taken back this original direction. That I believe it will continue. Then we'll see, because unfortunately the developments can't be established. Let's take a look at gold, a glance at gold. Here it is. Wait, there's a 3D PC too. Here it is. So yesterday we had said, that we were at the lows of that range that we had seen and pointed out. Maybe we can take another look. Zooming in a little bit. As I was saying yesterday, it could have been a good opportunity for a long attempt for the highs of this range that could have been there. At the moment, it seems like an attempt to break out of this range that we've had. In fact, we're working below it. Let's say we're right on the edge because we had identified this part. However, these were definitely areas of extension, so it's absolutely important to monitor these zones. A break of these would definitely lead to further lows for them as well, and we could easily find ourselves around 27, 27, and on the contrary. So if these levels hold, there could definitely be a return to the area of 3,000 for sure. This is definitely something to keep an eye on. At the moment for the day, we're already at the lows, as you can see. We've touched the WS1 level, so maximum attention. Then there's also the last weekly level here, so maximum attention, because even here, since yesterday the breakout has happened, the channel looks nice, clear and obvious to me, so just follow it and visualize it, draw it out wherever you need to. Just follow it, a breakout from either side, obviously from there, to a greater impulse. That's it. I think I've said everything. As always, I invite you to follow me on social media, on Patreon and YouTube. I also invite you to my channel, to our Discord channel, which is my Quanta Data. As always, we'll catch up later in the chat. Happy trading, everyone, and thanks for your attention.